Yeah, a new bill in Sacramento could help you keep your home insurance. Supporters say the bill is crucial as more Californians lose coverage or are forced into the state's FAIR Plan. The Insurance Coverage for Fire Safe Homes Act, SB 1076, would require insurers to offer and renew policies for homes that meet state wildfire safety standards set by the insurance commissioner.
It's not every day we see the snow line drop this much. Take a look here. A live look at the soaked roads as well. In the valley from Live Tracker 3, lots of rain.
You've seen the news about the 16 feet of snow and the mudslides in Wrightwood. But what the news isn't telling you is how this is showing up on your mortgage statement. In 2026, we are seeing the biggest shift in California real estate history, not because of interest rates, but because of insurance. California is currently navigating a period where extreme weather and regulatory shifts have converged to redefine the cost of residency. In February 2026, as atmospheric rivers brought record snowfall to the Sierra Nevada, a secondary crisis was already unfolding within the state's insurance market. While the physical destruction of mudslides and flooding captured the headlines, a more permanent shift was occurring in the technical filings of the Department of Insurance. The California real estate market is experiencing the most significant financial restructuring in a generation, and it is happening just as the state's climate enters a new, more volatile phase. In the last 2 weeks, at least 50 homes in Southern California have been red tagged, deemed uninhabitable by local authorities due to slope instability following the recent storms. That is a significant portion of the total structural losses recorded in all of 2025. Over 400 residents were evacuated from hillside communities in Los Angeles and San Bernardino counties as the soil reached its saturation point. Major thoroughfares were closed, and in some areas, the very ground beneath multi-million-dollar estates began to migrate. Villages, or rather entire neighborhoods, have been functionally cut off from the real estate market, and the financial danger level has not dropped. But here is the detail that tells the real story. On Tuesday morning, homeowners in the Beverly Crest and Wrightwood areas looked at their properties and saw the physical result of record rainfall. But just 2 days earlier, in a quiet administrative move, one of the state's largest insurers filed for another double-digit rate increase that would affect every policyholder in those same zip codes. To understand how California arrived at this moment, you have to watch the landscape accelerate. In early February 2026, the California Department of Insurance completed the implementation of the Sustainable Insurance Strategy. This was a regulatory overhaul designed to prevent a total market collapse after major insurers like State Farm and Allstate had largely stopped writing new policies. The new rules allow insurance companies to use catastrophe modeling. Previously, California law required insurers to set rates based only on what had happened in the past 20 years. Now, for the first time, they can use forward-looking AI models to predict future disasters. By February 12th, these models were already being used to justify premium hikes that, in some high-risk zones, exceeded 40%. The Regional Insurance Bureau has effectively raised the risk level to a state of permanent emergency. Across the state, the California FAIR Plan, the insurer of last resort, is struggling under its own weight. It now carries over 670,000 policies, a staggering increase from previous years. The entire system is operating under a level of stress that has not been seen in decades. In some coastal and mountain regions, the FAIR Plan is no longer the last resort, it is the only resort. And then it got worse. On February 15th, a homeowner in the Santa Monica Mountains received notice that their annual premium was increasing from $4,000 to $11,000. In the seconds after reading that document, the reality of the 2026 market became clear. It wasn't just about whether a house could survive a storm, it was about whether a family could survive the cost of protecting it. Rescue teams for the real estate market, policy experts, and state legislators are working through unstable economic terrain to find a solution. But that same week, 3 more insurers announced they would be pulling back from hillside properties entirely. Two of these companies were national carriers. One was a regional specialist. All three cited the same problem. The Western California hills do not sit on stable rock. The topography of California is defined by massive massifs and steep canyons. When atmospheric rivers hit these slopes, they deposit enormous volumes of water onto soil that has been weakened by previous wildfire seasons. These are the loaded chambers of the California landscape. They sit on top of older, weaker layers of sediment that can fracture and slide when disturbed. Federico Silva, a risk analyst for the state's housing board, recently noted that the core problem is persistent instability in the insurance pack, often covered by a surface-level appearance of market stability. He noted that the dangerous points are many and difficult to identify, even for an expert. A single season of heavy rain can be enough to trigger a catastrophic financial release for a neighborhood. But that was only half the problem. The California real estate market remains crowded despite these conditions. Tens of thousands of buyers are still entering the market during the worst insurance conditions in years. Silva warned that high demand has attracted buyers eager to secure properties, and that, as a result, the number of people exposed to uninsurable risk has increased proportionally. Two forces are tightening around California at the same time. The land is becoming more dangerous, and the market is becoming more expensive. On February 16th, the collision arrived for many in the Central Valley. An atmospheric river carrying warmer air from the tropics began to melt the deep snowpack in the Sierras. It created a rain-on-snow event, sending a massive volume of runoff into the river systems below. It is one of the most common causes of catastrophic flooding in California, and this year the snowpack was at record levels. Eyewitnesses in the Sacramento Valley saw the moments before the levees reached their limit. Several regional roads were buried underwater. Entire farming communities were cut off. By February 17th, roughly 200 people in the San Joaquin Valley were being assisted by emergency services as water began to enter their homes. The total reached over 500 people displaced from a single county. 5 dead, hundreds evacuated, and billions in potential property damage in a single week. Snow depths in the mountains exceeded 20 feet in some areas, and the state's emergency fund is already being stretched thin. The official weather bulletin published today rates the flood danger at a level 4 out of 5. The tendency is listed in one word: constant. More rain is forecast over the next 48 hours. And forecasters have identified another threat moving in. A midweek warming trend could send more meltwater into those same saturated layers of soil, triggering a new type of release: deep-seated landslides that carry more mass and travel farther than surface mudflows. State investigators are still determining whether the recent slide in Beverly Crest was triggered by a broken water main or released naturally by the rain. The red zone boundaries in the Santa Cruz Mountains could still shift. And the paradox that keeps real estate professionals awake at night is approaching. When the rain eventually stops and the immediate danger level drops, the period statistically responsible for the most financial loss begins. Homeowners will return to their properties believing they are safe because the sun is out, but the insurance pack will still be hiding its weakest layers beneath a surface that looks stable. How many more homes sit at the end of a single hillside road that one slide can erase? How do you tell a family that just paid a record price for a home that the ground beneath them has not finished moving? If premiums have already doubled this winter and the season of atmospheric rivers is only half over, who is counting the properties that have not fallen yet? In the valleys of California, they recovered the roads and cleared the mud this time. The question no one can answer is whether the market is finished with them.